Hey everyone, welcome back to my channel. Matthew Varga here. I've been getting asked a lot of questions from people who want to get into real estate investing, but they don't have enough money for a down payment or they're starting with very little capital. So in today's video, I'm going to go over 4 different ways that you can invest in real estate with very little of your own money needed. Before I jump into today's video, make sure you give this video a thumbs up, subscribe if you haven't already. It really helps with the YouTube algorithm and getting this video in front of more people so we can grow this community. So our first option is to invest in a real estate ETF. So in case you don't know, ETF stands for Exchange Traded Fund. A real estate ETF is a fund that holds a large variety of stocks from real estate investment trusts. So basically the fund invests in a large pool of companies that invest in office buildings, industrial complexes, hotels, and other real estate. So for an example, there's Vanguard Real Estate ETF, which has a symbol VNQ. And it's a very well-known real estate ETF. This fund is made up of hotel REITs, healthcare REITs, public storage. When we look at this fund's return since inception, it's been averaging about 9.15% per year. In their example from their site, if you would have invested $10,000 in 2011, it would have grown to over $25,000 today. These ETFs trade on the stock market like any other stock, so you can buy them per share. This would allow someone who's looking to get exposure to real estate, but maybe can't afford to buy a home by themselves, so they can purchase shares in this ETF for a relatively low cost compared to a down payment. Also, these funds typically come with a very low management expense fee. So for example, this Vanguard fund has a management fee of only 0.12%. So just like all investments, there are risks involved, so you need to make sure you do your research. And this Vanguard was just an example. There's many other funds like this that you can look into to see if it's a good fit for your portfolio. Another option is to invest in a real estate investment trust, otherwise known as a REIT. As I mentioned in the last point about the real estate ETF, they usually invest in a lot of REITs themselves. But say there was a REIT that you wanted to invest in individually, you can just go right to that REIT and purchase shares in that. So a REIT is a company that pools money together from all different investors and uses those funds to purchase and operate cash flowing real estate. Similar to an ETF, you can have REITs that are more specific to a certain niche, like say office spaces, or you can get ones that invest in a wide variety of real estate. Most REITs are publicly traded, so you can buy them just like you can any other stock in any other company. This allows you to invest with smaller amounts, but still get exposure to real estate like you're looking for. Another important thing to know about REITs is that they must pay out 90% of their taxable income in the form of dividends. So since REITs normally pay a dividend monthly or quarterly, they can be a great addition to your portfolio if you're looking for that more passive income. The third option is to privately lend your money to a professional real estate investor. So this is exactly what our investment partners do with us, and it's typically done in one of 2 ways. So the first way is if you actually want to own real estate and you're looking for more a long-term investment approach, then normally an investment partner would put up all the money, and then we would go and we would find a good property, we would negotiate the deal, we would get all the renos done, get the property set up and all ready, and then we would fill it with tenants. And then we would just sit back, collect the rent, have the mortgage get paid down. And then in 4 or 5 years, whatever our investment time frame was, we would look to either sell that property and split the profit 50-50, or we could hold that property for longer and just keep letting it cash flow and make us more money. Another option, if someone didn't want to have their funds locked up for a long period of time, would be they would lend that money out at a set rate of interest, typically 10 to 15%. And then once that money's lent out, they would just sit back, collect their monthly interest payments. The great thing with this option is that there's no tenants, no toilets to fix, no headaches. You're really just getting your monthly interest payments until that deal is complete. Then you get all your capital back, and then you can look to put that into another investment. For an example, if someone were to invest $100,000 at 12% interest, they would be collecting $1,000 a month just straight cash flow. After the deal is done, they would get their $100,000 capital back, and then they could look to invest it again and continue making more money. If you guys want me to do a more in-depth video about private lending, I'll be happy to do that because I really think it's a great way to create passive income with very little work involved. Final option is a joint venture partnership. This is a great way for someone who has very little capital to look to partner with someone to get into real estate investing. For example, if you don't have a large amount of capital for a down payment, maybe you can find a friend, a coworker, a family member to partner with where they're putting up the funds for the down payment and you're going out doing the hustle, finding the property, getting it under contract, getting everything locked up and ready. So you're more of the active partner and they're just putting the funds up so you guys can partner together and get a property. Or maybe you're great with your hands and you could turn an old, ugly home into a beautiful house. In that case, you could find a money partner who's going to put up all the funds and you're going to bring your construction skills and sweat equity into the deal. Another idea is if you have great credit and the ability to qualify for a mortgage, but you don't have a down payment yourself, well, maybe you can partner with someone who can't get any more properties because they already own too many, or maybe a self-employed business owner who can't qualify for a property on their own because they have self-employed income. In that case, you can create a great partnership where you're qualifying for the mortgage, they're putting up the funds for the down payment, and you're creating a great win-win partnership. The great thing with real estate is you're only limited by your own thoughts and your own personal limitations. If you're willing to be creative, think outside the box, and come up with solutions to solve other people's problems, then there's always an opportunity to get a deal done. A couple other potential ideas that I'm not going to go in depth in to help you get into real estate if you don't have a lot of funds would be to invest in a real estate focused company. You could look to invest in stocks and companies that own hotels or resorts or big development companies. Another option would be to invest in home construction companies. So you might not want to invest in real estate directly, but investing in industries that benefit from real estate is another option as well. And another option would be you could invest in real estate notes. So there you have it. There's a few ways that you can get into real estate investing with little to no money needed. Like any other investing, you need to make sure you do your research, find out what investing strategy works best for you and fits your risk tolerance. Make sure you give this video a big thumbs up, subscribe if you're not already, leave a comment down below letting me know future videos you want to see. Thanks again for watching today's video and I'll see you guys next week.